Anybody heard of a non-qualified mortgage or what it might means to have a non-qualified mortgage?
I've heard of it before.
Okay, do you mind sharing what you know of them so far?
It's been a long time, but it has something to do with your your status and where you are. I'm not sure if it's the type of job that you have that you can qualify without going through the entire process. I think it's with just showing your bank statements. I'm not really sure. I think I'm going in the right directions, but I don't remember all the details.
Yes, ma'am, you are actually going in the right direction. So I just wrote down a few key things that you shared, and one was status, one was your job situation. Forgive me, let me turn this off. And then one was it can shorten your process. So those are, you should just do the presentation for me, really. That would be awesome.
No,
Um,
that's okay.
Come on, Mr. Mance, you got it. All right, so y'all are familiar with who I am. My name is Tamika Hunt. I'm a loan officer. And again, I believe all of us on here are family and you all have participated with us in the past. So if y'all see anyone that's new, definitely send them a welcome in the chat. This is just a little bit of background on cross-country mortgage, but of course, it's so important that you have a trusted loan officer no matter what company you're working with. So with your non-qualified mortgage, we're going to go into what that actually means. It allows a borrower with a non-traditional income, or maybe they have some interesting things that have happened to them in the past, different credit events. It helps them to get approved for a home loan. Many of your applicants who could benefit from a non-QM product kind of know that they're in that situation. Like sometimes they don't have U.S. citizenship, maybe. Maybe they are a self-employed borrower or someone who gets paid in cash or 1099s. Maybe there's someone who hasn't kept the best records on their tax returns. So their status could be whether they're a citizen or not, or whether they live in a foreign country and not the United States. And maybe they want to invest in the United States because you do see a lot of people. I know Mrs. Josetta's on here, but she works with a lot of investors. So let's say that she starts to get clientele from maybe Canada or something of that sort. Hi, Miss Dominique. Um, if she starts to get clientele from Canada or somewhere else or Mexico or any place and they want to invest in the United States, there are loan programs for those individuals as well. All right, so we're going to talk about some of the different products that might pertain to clients you're working with. Asset qualifiers, borrowers who can get approved using only their liquid assets. So that's important because you have some wealthier clientele that maybe they don't qualify with pay stubs. We had a borrower recently and they didn't have work, so we're able to use their assets to get them approved. Bank statement loans, this is very popular. The foreign national program, this is where they live in a different country outside of the United States. Full doc program, this is for someone who maybe has a little bit of a credit challenge, or maybe they had a bankruptcy with less than the normal requirement for bankruptcy. Our signature expanded program can possibly help that client. Investor cash flow, we'll talk about all of these individually. 1099 program, profit and loss program, the written verification of employment, and then of course the I-10 program. Let's see if I can get to the next slide. And this is of course just an open forum. If you all have questions, just go ahead and shout them out or put them in the chat. So the expanded program that we have here, flexible qualification options for borrowers that don't meet the traditional standards. So I would say when you're speaking with people, you want to, ask some probing questions regarding, how's your credit? How do you feel about your credit? What type of work have you done in the past couple years? How much have you saved to go toward buying a house? But listen for the things that could be problematic so that when you refer them to us, we can kind of run towards what might be a problem for them and try to provide a solution quicker. Streamline documentation. I was just thinking again about what Ms. Germain shared with us, and she put a shorter process. So it can be streamlined documentation for these sorts of products. Shortened seasoning. So that's like on a bankruptcy, having a shorter window to wait. There are also interest-only programs and products for people. And then non-warrantable condos. Here in Texas, we have lots of condo associations. Little Rock, Arkansas, I think they have some condos, not as many, but there are some projects or condo projects, I don't know if you want to call condominium projects, where they aren't warrantable for possibly an FHA loan, or maybe their condo association is not up to snuff and they're not on the approved condo list. So we have programs to assist. And then for people who are investors and they want to close in an LLC, or maybe they are a home buyer who wants to close in a trust or corporation, we're able to provide that all within our company. We don't have to farm those things out. So your extended or expanded, I'm going to keep saying extended, I believe I am, expanded bank statement program. Everything in the expanded program goes up to 90% loan to value. Of course, at a 620 credit score, it's not going to go up to 90% loan to value. So these programs are ideal for people who have a higher credit score to have that lower down payment required on them. So remember, they are not traditional loans, so they're going to have a little bit higher down payment program. And in order to just have that minimum of 10%, they do need a higher credit score. So a 620 is the minimum, but that might require them to have a 20% down payment or a 30% down payment. So each client is different and it's no set standard of rules. There are some minimums and maximums, but there are also some caveats that may change what each particular client can or cannot do. So you all can read the details here, and if you would like, I can send you a copy of the presentation, after we're done. But pretty much with a bank statement loan, you're looking at a 12 or 24-month window. The bank statements that can be included are your personal bank statements or your business bank statements. So many times they cannot be intertwined, but they can be used separately. So we'd want to look at where you're depositing your income. If you are a truck driver, for instance, and you have bank statements, but your tax returns don't look the best. So a bank statement loan could work good for independent business owners, or maybe a cosmetologist or a barber or someone like that. A bank statement loan could work well for them. Anybody have questions on a bank statement loan or what that is?
Yes, if you
Or-
can share some
Yes.
insight. I'm sorry.
I'll go
Miss
ahead.
Welcome.
Hello, hello. I was just going to ask, were there any other documents required as far as, tax documents or anything like that?
No, ma'am. So the
Okay.
bank statement program, they average your deposits, of course, and they're going to use an expense ratio or an expense factor. So they're gonna take a guess at what your expenses could be. And
Okay.
then they're gonna tell us, hey, this is how much income we can use. And the blessing of it is, like, we don't have to sit here and do it. There's a special desk that does that calculation. And if, let's say that you gave us your 12 months and you said, but I gave you January and February, but those are my slow months. So I'm gonna try to kick it up a notch this January and February. So you can alter the average by having a couple of really great months, right? So,
Mm-hmm.
but looking at whether 12 months works or 24 months works, we can look at both options and then just use one. So we are always looking for a way to make your loan work.
Okay. Is it either 12 or 24, or is it
It is.
12 between 24? Oh, okay.
It's 12 or 24.
Okay. Gotcha. Thank you.
Yes,
Thank you
ma'am.
so much. Yeah.
Absolutely. And again, we take them both and then see which one makes the most sense if you have access to them all.
Gotcha. Thank
Mhm.
you. Oh,
Yes.
one last question. If you take 24, do you average on 24? Or do you average just 12 out of the 24?
24. So if you
Oh,
use
24. Okay. Okay,
That's
all
a
right.
great question. Great.
Okay, thank you.
Yes, ma'am. Anyone else have a question on bank statement loans or who it might be suitable for?
Jamaica.
Yes,
This is,
ma'am.
this is Josetta.
Yes, ma'am.
Can you own property and still qualify for this?
Yes, ma'am. So your credit report is still going to be taken into account. So your credit, your debts, all the bank statement is doing is taking out a W-2 or a tax return situation. So it's helping that self-employed person, let's say we have that attorney who owns his own law firm, and that attorney doesn't keep up with his taxes very well. And I done spoke to this real true story. And I said, so-and-so attorney, you need to show X on your taxes, for your loan to work. And he was like, I can tell you right now, I'm not gonna do that. I was like, okay, well, you need a loan, this is how we get it done. And he truly did make a lot of cash receipts. Like he got paid mostly in cash. I didn't forget what type of attorney he was, but I felt like I was on a TV show or something, the amount of the deposits he had. But yes, ma'am. So it's for that person that's pretty much self-employed.
Okay.
Okay, one more question, what, a
Yeah, I
two-part,
figured.
actually.
Go for it.
I'm sorry.
No, take your time.
Does it work for, is this just for primary? Or does it work for investors, or does it also, let's see what I was gonna ask. It's more documented, well, never mind. That's what I wanna know. Primary or investors, or
So
both?
the bank statement loan you can do for both. And the other thing that's key to know for your investors on some of these programs that are the expanded program and not a traditional program, they have the option of taking a prepayment penalty. So for investors, now not primary home buyers. So for a primary home buyer, you cannot have a prepayment penalty. So that means you can pay your loan off or refinance it or whatever you want to do in the future. But for an investor, they have the option to add a prepayment penalty, which gives them a better interest rate option. But right now, like interest rates on these programs are not very bad at all. They're pretty good.
Mm,
And it's all in-house. So we have our own underwriting staff for these programs.
So Tamika, investors can use this program
Mhm.
to buy investment property. Would that be a commercial loan?
No, ma'am. So these are all residential loans. They're not commercial loans. So the only thing that would take something to the commercial platform would be if it was over 4 units. So if it was 5 or more units together.
mm. And is the PMI eliminated on this, or is that's just an
PMI.
FHA thing? No, okay,
No
great,
PMI.
okay.
Here's the other good thing. So you're gonna have a 10% down payment, right? Bank statement loan. So how much in closing costs can you ask for? It's
On
gonna follow.
10%?
You can
Is it
actually,
6%?
yes, you can.
6%?
Because it's gonna follow the conforming closing cost rules. And normal conventional loans, we're used to 5% or 3% down. And you can only ask for 3% on a normal conforming conventional loan, not FHA, conventional. So this is gonna follow that. You can actually ask for up to 6% for that primary purchase.
Excellent. Thank you.
That's a great question. Anybody else have a question on a bank statement loan? Go to the, Miss Sandra, you have a question, sweet lady?
Oh, no, I don't.
Okay.
I don't.
I'm gonna go on to the next one, and we can always come back. Expanded asset qualifier. So again, this one has the same loan to value and minimum credit score requirement. Keep in mind down here, I forgot to point this out. So the loan amount minimum is $100,000. So that means your client needs to buy a house price, over 100,000, so that their loan amount can at least be 100,000. If it's a few dollars less than that, maybe up to 90, not 90,000, yes, $10,000 off, we could probably get an exception. But ideally, they want the loan amount to be at least $100,000. And the max debt to income ratio, 50%. So let's read over this. A program where qualification is determined based on the financial assets rather than a DTI. So it's basically a certain amount of money that the people have in assets to take care of their monthly payment. So you're looking at liquid assets like their checking accounts, savings, marketable securities. Those are things like their mutual funds, retirement accounts, cryptocurrency. Have y'all ever ran into people with cryptocurrency before? No?
Yes, I have.
Yeah, we had one and it didn't work out very well. It seemed as if he got ripped off. And I did have another one in California and his was legitimate. He actually took money to put down on a property. So these are just different sources of liquidable assets. So high net worth borrowers, clients who recently sold their business or property, retirees, or individuals who have recently changed jobs. So of course, the amount of assets they need to have is going to be dependent upon the loan to value that they're going for and also what their credit score looks like. So if a person is not fully employed, it doesn't mean that they can't get a home loan. And also too, in addition to the Signature Expanded program, even on a traditional home loan, if that client has, a good credit score, if they have some retirement assets that they could start a monthly check a month from those assets, they could use that as part of their income on a monthly basis. So if you have clients, because we run into a lot of clients that are on fixed income. So if they have a social security or retirement check, but they want, X price house, and let's say they have some retirement assets and they are retirement age, they could start a check a month from those to make up the difference in what they need for their debt to income ratio. They could also possibly use a reverse mortgage to purchase a home. So if you have clients that are 62 and over, we also have the reverse mortgage that can help them too. And all of that is just different ways to use their assets or current equity that they have in a property that they own. So one of the things with the girls, my team, since we're all girls, one of the things I express to them often is how can we? So when we're listening to our clients, or when you all are listening to your clients initially, and they're telling you the things, most of the time we only hear the things they can't do or the things that's negative or in the way. But we have to start thinking with the how can we ear? How can we, hey, here are the obstacles, but okay, how can we? What option do we have to help this person move forward? And it's not always what they think or what they envision, but do we have any possible option to help them move forward with their goal?
Quick question on the reverse mortgage.
Yes, ma'am.
If a person had a reverse mortgage, but then they got out of it because they refinanced their home,
Mm-hmm.
but now they decided they want to go back into it, can they?
Yes, ma'am.
Okay.
Mm-hmm.
Okay. All right.
We,
Okay.
we
Thank you.
have a reverse specialist that we can do a Zoom call with, just an
Okay.
introduction call to see if it makes sense for them. They do a real quick calculation to tell them if it makes sense for them.
Okay. Excellent.
Yes,
Thank you.
you're welcome.
Now, when they do a reverse mortgage, do they cash out? Is there a cash out
It
option also?
can be. So
Oh, it
depending
can
on
be.
the
Okay.
amount of equity, they could pay off their current loan, take a
Mm-hmm.
distribution, and then take another distribution after 12 months. So they can actually get money out of their property if there's enough value there to pay off the loan that they currently
Excellent.
have. And they can
Excellent.
use it to buy into another house and buy more.
And one last question. You may not know this is maybe for an attorney. If this person goes back into and do a reverse mortgage, but they also have a beneficiary listed on that house, does that negate the beneficiary, or what happens
Have
if that
someone on
person,
the deed or will,
someone on their deed?
someone else is on their deed. So
No,
to
no, no. If
trace.
they have a beneficiary to their deed.
Well, you wouldn't have a beneficiary unless it's a life insurance or something.
Oh,
So how,
okay.
It sound like, do you know someone that did a beneficiary deed?
Yes. Yes, they went
Okay,
to an attorney and
okay,
had someone listed as had one of their kids listed as a beneficiary.
gotcha.
Uh, mhm, because, and the reason why, in case she got sick or what have you, and needed some type of help, Medicare cannot take her home.
Right.
But if it's in a reverse mortgage, I was just wondering if that changes things. I know you may or
And
may
you
not
would
know that.
write that question down,
Okay,
please, or
okay,
put it in the chat, and I will
okay.
get that question answered by the reverse mortgage specialist so I don't lead you wrong.
Yeah, that'll work. That'll work. Okay, no problem. Thank
But
you.
that's a great question, and it could
Okay,
also be state specific. You know, so many things can be
that's true.
state specific, but yeah, that sounds like a state planning type question.
It was,
Mr.
yeah.
Mance might know. Mr. Mance, can you think on that?
Well, what I'm thinking is that in a reverse mortgage, the bank has priority over everybody.
Right,
And so they're going to get their money first. Now, if there's money left over after that, then they might be able to take that money.
was any of that in your probate course
No,
this
but I
year?
just know that you get a reverse mortgage because, and the bank is going to get their money regardless.
Yeah, yeah,
They're not
I
going to
agree
lose
with
their
that.
money to anyone.
Right,
Now,
Mhm.
what's left over
would then go to the beneficiary probably.
would probably go to the beneficiary.
Now,
Now,
by what's left
my
over,
thought,
what do you?
my
Mhm.
thought, Miss Felicia, would also be if that person is on the deed, in order to complete any transaction, they possibly would have to sign.
Yeah,
Um,
yeah,
but it can be, you are speaking something I don't know, which is beneficiary deed. So if anybody's on just a traditional deed, they have to sign when a transaction takes place.
Right.
gotcha,
And what I
gotcha.
mean by
That
what's
makes
left
sense.
over is that when you take out a reverse mortgage, you don't have to take everything that you qualify for.
You don't, that's
Oh,
correct.
okay, okay,
So
okay,
you
okay.
may qualify to take $100,000, but you may say, well, I only need
This amount,
$25,000.
that's true.
So your reverse mortgage is going to be for $25,000. So you still
And
have additional equity in your home.
that's interesting. And then if they do that, then how does that work? Well, okay, never mind. Never mind. Thank you.
The,
I'll tell
the
her.
thing about the reverse mortgage, it stops your payments. So it allows you to
Right.
take whatever monies you might want or need or pay off your existing
Mm-hmm.
loan, and it
Mm-hmm.
stops you having mortgage payments. And you just have to
Okay.
keep taxes, insurance, and keep the home up. You have to keep the home in good condition.
Gotcha. Okay. All right. Okay.
So we
Well,
can
thank you.
make that call. That's a good one.
Sounds like a good Zoom meeting.
It does. I already got it booked. I got it booked for what's this month? Got it booked for September. It's coming out.
Excellent.
Yep, it's coming out. All right. So your signature expanded investor cash flow. Has anybody heard of the DSCR program? If you have, this is exactly what it is. Debt service coverage ratio loan. That's what it is.
Okay, I watched a couple of YouTube videos, but they didn't really go into detail, and I did want to know more about it.
Okay. Well, the max LTV on this program is 85%. This is for what type of borrower? Investor. It's for an investor. So
Mm.
this is not for a primary buyer. Okay. This is only for your investor. So your
Mm-hmm.
investor is going to pick up a rental property with a minimum of 15% down. Ideally it's going to be more than that so you can get on the rate chart. So 85% with their stellar credit score. But they want to have a decent credit score. If they're at a 620, they're not going to just be putting 15% down. So all you're going to do here is you're going to take the estimated rents according to the appraisal, the estimated rents, and then you're going to divide the payment. So we will go up to 0.75%. So as long as the rent covers up to at least 75% of the payment, the loan can be done.
Mm-hmm.
So we know that most investors, they don't want to get into a house if they're not making any money. So
Mm-hmm.
they at least want to break even. So ideally, their rent would surpass what their estimated mortgage would be. And then you got a good situation right there. So they're able to qualify without anything. They have to have a little bit of reserves. They do have to have a little bit of money in the bank for reserves, but no W-2s, no pay stubs, no tax returns, no rental agreements, no paperwork pretty much. Just the appraisal. Mm-hmm. Yep. And they
I
can
had
close that loan in their business name.
say that again.
They can close that loan in their business name.
How long do the funds have to be, they have to be
It's a
seasoned for?
30-day bank statement.
Okay.
30 day, you say?
30-day bank statement to show any reserves.
Uh-huh.
Okay, so I just want to make sure I heard you correct. They just need to be able to show the reserves for at least 30 days, prove that they had it. But they don't have to show any other documents?
No, ma'am. They need their ID. Now, if they currently own a house or have mortgages, they can request verifications of mortgage if their mortgages aren't on their credit report, just to show that they pay timely on debt like that. So, because sometimes you have investors that have mortgages other places,
Mhm.
or like hard money type loans or things that aren't on their credit report. So, but no W-2s, no pay stubs, no verifications of employment, no tax returns. It's pretty simple. They just need to find a property that makes sense. Where the
Wow, and
rent,
it's a minimum of 100,000. They just need to show 15% reserves. Okay, a minimum of 15%.
yeah, you wanna
Okay,
have more than that, you know, they always wanna show us all the glory. But in order to have a decent rate on an investment property, you want at least 20% down.
sounds good.
And then the loan minimum is $100,000, so that means the purchase has to be over $100,000. All right,
Has to be over 100.
yes, because once you put your down payment, you
Okay, okay.
borrow at least 100. Your signature expanded full doc. So this is where you're gonna have people that maybe they are 1 year out of their bankruptcy instead of 2 years, or maybe there is a divorce with some interesting situation. So it'll normally help with someone who has one little issue, not 2, 3, 4, 5 issues, but maybe they got just one little thing that they couldn't control, and can we get it done? So looking down here at the bottom, who benefits from this program? Borrowers who need non-traditional financing. Maybe they're a DACA resident, someone who came here as a child. Maybe they have the identification number that's not the social security number. So they have that ID number that allows them to file their taxes, but they're not truly a US citizen, right? Maybe we're utilizing some assets to make up some income. W-2 to 1099. So maybe they haven't had their 1099 for 2 years. Maybe they only had it 1 year, and they have some kind of peculiar situation. So this is where we want to ask further questions. If they have 1 or 2 things that's a little strange, to see if our expanded section can get the loan done for us. The only caveat, again, is the down payment. So we run into clients that have very few problems, right? But they have no money. And that's the problem that we run into a lot. So these programs aren't for people who don't have the ability to come up with some type of funds, whether it be a gift or something of that sort. They're definitely for people who have some resources at their disposal. And I think that's what we have to keep in mind too. Some of the clients that we work with don't always have a ton of resources, but those that do, we have programs to help those folks. Uh-oh, I didn't
Tomekia,
mean to go that far. Yes, ma'am?
can you go back to that page where you just were?
Yes, ma'am, I didn't mean to, my finger did that.
Okay, so that last statement or needing departing residence omission, can you explain what that is?
Okay, borrowers who have a recent credit event, that's something like a bankruptcy, foreclosure, something like that. Debt to income is over the limit, divorce situation, or need a departing residence omission. So that could be something like they need to count the rent for the departing residents. Or they need to somehow offset that. So we have loan programs like FHA and conventional that have strict departing residence requirements. So for instance, if you are going into an FHA loan, there are departing residence requirements to be able to count the rent from your current house. So if your client has enough money, they could possibly get one of these types of loans and not have to worry about that issue.
Okay,
But
thank
in the
you.
same sense, they maybe could just do a conventional loan, right? But if their credit is 660, or this, it might not go through conventional.
Right.
So, yeah. So
Okay.
Miss Angela, how you doing?
Oh, I'm doing okay.
Good, good. You have a question?
Not yet. I just want to get a copy of all of this so I can, review it.
Okay, thank you, Miss Sandra. So also down here, it talks about unique properties. So of course, in Arkansas and in Texas, we have properties that have lots of acreage, and some traditional loan products don't cover lots of acreage with the house. So if it's a house in over 20 acres or over 10 acres, it might be hard to get a traditional conforming loan. So that's when we go to our expanded desk and we ask them if it's something that they could do for us. So the more information we have, the better we can send the scenario over to try to get that loan done. All right. Signature Expanded Foreign National. So again, this program is specific to investors. So this is going to be for your people that are out of the United States and they want to invest in the United States. So the max loan to value for this program is 75. That means those folks need a 25% down payment. Now, if people are calling and reaching out to you for this type of program, they've probably done it before or looked into it, and having a 25% down payment is not a problem. So they want to invest in, a lot of investors are coming to Little Rock. There's always been a lot in Texas, but a lot are coming to Arkansas as well. So if you have contacts or if your social media is putting you into a place where you're meeting people from other countries, you have a program to be able to help them to invest into your area. Has anyone ever worked with someone outside of the United States yet?
No,
Not yet?
no.
Okay. So non-US citizens looking to invest in US real estate. So these are also things you can begin to market, because again, we're in a whole nother arena now with social media and the internet. We're able to market to anyone. So it's such a blessing. Signature Expanded 1099 Program. So this program is for self-employed borrowers who receive 1099s as their primary source of income. So it could be an independent contractor or commission sales type of person. Why does it exist? Streamlined documentation, option for qualified borrowers, compared with a full doc or bank statement loan. So bank statements might not work for everybody, but the amount they make on their 1099 tells you where they are. So this program qualifies the borrower with their 1099 statements. 1 or 2 years can be used. 90% of gross receipts are used to qualify. This is a phenomenal program. So the max LTV is 90%. So 1 or 2 years can be used to qualify. If they have 2 years, of course, they would get better options when it comes to rates and things of that sort. But 90% of gross receipts are used to qualify. This is pretty doggone awesome. I love it. Anybody have questions? This one is pretty easy.
Yeah, quick question on this 1099 program. If a person has a combination of 1099 and W-2s, can they still do this program? Can you use it? Or I'm sorry, Tomekia.
No, that's a good one. So that's a good question. 1099 and W-2. When it comes to that, it's gonna put you more toward the full doc again.
Gotcha.
And it's gonna want your tax returns. But I would
Okay.
send that scenario up. So if I had your W-2s and your 1099s, I would send that scenario up. Because if you look at all these programs, people can go into about 3 of them. If they can go into 1 of them, they can go into 3 of them, right?
Okay, right.
1099s, we could look at bank statements. If you
Mm-hmm.
have a certain amount of assets, we could look at this. So a lot of people could use 2 or 3 of these programs. We just have to figure out which one best suits them.
Yes,
Yeah.
yes,
And so
makes sense.
it just takes us having a want to, can do, will do attitude. And for us setting the right expectations, because it's not cut and dry. So once we get all the information, we send it up to the scenario desk. We ask them to take a look at it. So we set proper expectations, and that's what's important. So no, you're not gonna get a pre-approval in an hour, but you're gonna have some leeway every day, what's going on. Because it's not cut and dry, but it's available. Thank you, Lord. All right, profit and loss. So a program for business owners to qualify using a professionally prepared 12 or 24-month profit and loss statement. So it'll say it down here, documentation must be prepared by a CPA. Some type of person who is licensed to do bookkeeping has to prepare these documents. So the program qualifies the borrowers based on an average from their third-party verified profit and loss over a 12 or 24-month period. Does anyone keep a profit and loss statement today? Anybody? All of y'all
No.
are business owners on here. Anybody keep a profit and loss?
No.
No? So.
I do, Tamika, my CPA, yes.
Okay, great. So, Ms. Josetta, that's awesome. So in our coaching and training, we're taught to keep a profit and loss on a monthly basis. So even if your business is not, several branches where you need a full-on monthly payroll or bookkeeping type service, on an Excel spreadsheet, you can keep up with the profit and loss for your real estate business. I think just about everybody on here is real estate. Miss Felicia does some insurance. And then Miss Angela does some other renovation work too. So you might have a profit and loss for each segment of your business. And that's so that you can keep up with like what percentage of your income are you using for advertising? What percent toward labor and wages? What percent toward just your supplies? So you can see on a monthly basis how you're spending your money and if it's making sense, the different branches of what you're doing. Ms. Phaedra, you mentioned you have another gift that you're about to start using. So you'll look at, well, what did those licenses cost me? What is it costing me to sign up for these services to be on their platform? So for me, I have to look at that. What do gifts cost when I send out gift cards or thank you cards or do the pizza day or whatever? What are those things? What are realtor lunches costing to make sure that I stay within a certain percentage of my business for expenditures and make sure I'm being profitable. So that's all the profit and loss is saying. It's just saying you are being profitable. But if you notice here, evidently it has a little bit more risk because it's taking someone's word for your earnings. So the maximum LTV is going to be 80%. So this program is going to be for a primary borrower. It's not just set for an investor, whereas a couple of other programs were set just for investors. And if anybody would like some help on setting up a profit and loss or looking at that separately, I can help you with that. Written verification of employment, again, the max is 80%. So the lower the amount of documentation or the ease of the product, you're having to have a higher down payment. Also, the minimum credit score is 680. So a program that streamlines the income verification process by going straight to the employer for verification. Why does this exist? For borrowers who may have a hard time or take longer qualifying based on inconsistent income. So program qualifies the borrower by having the employer fill out a written verification of employment. So it says here the written verification of employment offers an alternative approach to income verification, providing a streamlined and reliable method for confirming a borrower's employment status. We save time and effort for the client, for they do not need to supply additional income documentation. So again, this is all about streamlining the process for that client. I'm thinking of one we have right now that his job changed, his job role changed. So his pay stubs, W-2s, they are not lining out. His written verification looks a whole lot better than what his previous role was, which we have to average all of that income because his role just changed and it's not salaried. So there could be onesies and twosies that this program would help. Do y'all have any questions about what a written verification of employment is? And just let me tell y'all, since COVID, it seems like these things just take longer and longer to get back, because sometimes we have to get them if people's verifications aren't automated. And it's like, goodness gracious. Just getting it back. All right, the individual tax ID number. I believe a few of us have worked together with some clients who have an individual tax ID number. So if you have clients who do not have a traditional social security number and they use an individual tax ID number to file their taxes, they are still eligible to purchase a home. So you got a full doc max LTV, bank statement, and then you have DSCR. So you have these programs that are set up for those who do not have a traditional social security number. So they may not even have a credit score, but some of those people can get a credit score. Have you all ever worked with someone with a ITIN?
I have
No.
not, no.
Okay, we'll have to talk about some credit tips. I need to set that up because we do that all day with our clients, but we need to set that up for our realtors so that you all have more tips to share with your borrowers when you're talking to them.
So I have a potential client,
Yes,
and
ma'am?
I was, Tamika, using another lender because she was fluent in Spanish.
Mm-hmm.
And for whatever reason, like we were doing the tips and everything that that realtor had that lender had given to us
Yeah,
for them to do. And then it's like she just kind of went ghost. So
yeah,
he ended up renting something, whatever, but he definitely wants to purchase. So I guess one of the things would be, do you all have someone who's fluent in Spanish? Because, you know, mortgages are so complicated, even though in their life and their casualness, you know, they feel comfortable sometimes with English. When you're doing something like this, they're really going to prefer that. At least the people that I know and who are interested, they really would prefer to speak to someone who's Spanish speaking to walk them through that.
right. So I have a Spanish speaking loan officer partner in my branch. And so
Okay.
if that person is their primary language, is Spanish, we can do that. We can also use Google Translate to get the process started. We have a Spanish application that we can send to them.
Mhm.
So we could use Google Translate because I just prefer to work with my own clients, and I think it's so much technology now that we can actually make it work because no one takes care of your clients like you do.
That's true. I mean, for me, Google
But we do
Translate
have a
is,
Spanish speaking LO that we can get him in touch with within our branch, and I'm still able to kind of walk alongside him.
yeah. So we can pin that and talk about it later, but
Sounds
that's good
good.
to know.
Yes, ma'am. All right, unique properties. I think I meant to take this out, but that's okay. This talks about some of the properties that can be used or what type of unique properties that may go with the different programs, so full doc, bank statement, asset qualification. So you can still have a manufactured home. You can even have a mixed use property. Very good. Okay. Financing for buildings that have been used in addition to their normal residential use. So maybe there is an insurance shop, on the first floor, and then the second floor, they live in the second floor. I'm smiling because this just resolved a problem that I thought we was gonna have, and now we're not gonna have it. Thank you, Jesus. All right, so for the mixed use property, it says borrower is not required to occupy the property or be the owner and or operator of the business. Up to 30% of the rental income from the non-residential unit can be used for income. Up to 30% of the rental income from the non-residential unit can be used toward income. That's interesting. So if the insurance company is receiving, if the person is receiving rent from the insurance company, 30% of that can go towards that person's income calculation. Pretty cool. And then manufactured homes. So we do manufactured homes, you know, each one can be different, but we do manufactured homes. So I think I helped 3 families last year with the manufactured home, and only one of them had a little bit of structural issue. Other than that, there is some title stuff that I have to make you guys aware of when you do a manufactured home, but some of y'all have probably done them. Commonly requested exceptions, because this is the reason that a lot of people use the expanded product. So if you have a program that would traditionally need landlord history, we can ask for an exception and not need landlord history. 5 to 10% in LTV. So if your down payment was a 25% down payment requirement, we could try to see if we have some compensating factors and ask for less of a down payment. Different FICO exceptions, the maximum or the minimum loan amount. So where it said 100,000 minimum loan amount, maybe it could go down to 90. So anything that's outside of the guidelines, we can ask for an exception. When you ask for an exception, though, it can make a change to your interest rate. The higher the risk that a person is taking on the loan, the more they're going to charge you on an interest rate. If your client is using a bank statement loan and they have NSFs, we can try to see if there's a reason behind it and ask for an exception. Declining deposits, housing payment history, multiple, what is NW condo features? I'm not sure what NW stands for, forgive me. I think it's non-warrantable, that's it. Multiple non-warranty condo features. And then here's another big one, is if people have housing payment delinquency. So what this means is one late for 30 days in 12 months. So if a traditional loan program won't let the file go through for whatever reason because of lates on their mortgage, but maybe that client had a medical situation or death in their family or a loss of job, maybe we can get around some of that and use the expanded program. Using business assets with a less than a 51% ownership. That's a key one, because some of us have joint interest in business. Use of business assets without a CPA letter. That's another good one. The acreage, hobby farms, having insufficient trade lines, multi-unit with an ADU, and the ADU is the accessory dwelling unit. So have you all ever dealt with a property with an ADU yet? Has anyone had something with like a small rental in the back or an additional entrance to a home that could be an ADU?
No, I wish I had one for
Yeah.
myself.
I know, right? Trust me, I'm like trying to think of a way. I'm like, I got a little corner in my yard. I could just put another little driveway. Probably figure it out. Angela, can you make it happen for me?
What do you say? Can I do what?
Can you make it happen for me? Come build me an
Oh,
ADU.
you know, that's easy. That's no problem. The only
That's
thing you
too
all
easy.
wanna make sure you check, because as some of those things have become more and more popular, a lot of cities have restrictions against them
Uh-huh,
existing. So you see a lot of people that are turned like one of those tough sheds or something
right.
into one. And you gotta make sure that the city that you're in actually allows it, because you don't want, because the mortgage company, they might finance it and the city might tell you to knock it down.
That'd be bad news.
That would be bad.
That would be bad news.
The
So
homeowners, your homeowners association might not allow it either.
very true, very true. And Miss Sandra Angela is in Arkansas right now. Miss Sandra is here in San Antonio. So everywhere here is a homeowners association, and Miss Sandra, Arkansas is not as crazy yet. It's probably gonna get that way where there's HOAs everywhere, but it's not that crazy yet. But pretty much anything that you have that makes sense, we'll try to find a way to do it. So if it makes sense, we'll definitely try to find a way to get it done. So of course, we have co-branded marketing material that's available to you. So if any of you are signed up with Total Expert that's tied to myself, you're able to print your own media or your own posts and things of that sort. And if you want something custom made for you, I can request that through my marketing desk. So if you have something that you would like to promote, any one of these programs or anything else, anything creative that you come up with, whatever your special gifts, talents, and your arenas that you focus on, some of you all have some very specific arenas that you focus on. So if you need anything made, don't hesitate to send it to us, and then I can connect you to Miss Brittany, and she will get it taken care of for you. Isn't that right, Mr. Mance? So we did some custom things for Mr. Mance, and it's at no cost to you.
Wow.
Yes, so whatever you need, please let us know. We're happy to help you. We have a couple of minutes left. Do y'all have any questions for me pertaining to this or anything else in mortgage land or real estate land?
It's time. I think you did a wonderful job as per usual.
As usual.
Thank you. Well, I
Very
hope that you guys will go back through your leads, and kind of keep these things on your mind as you're talking to people. And during these times, we definitely have to stay pulled together as a team. There's so much going on in real estate, in the country, just in our homes. It's a lot going on. So it's important that we pull together, hold one another up, but just having that ear to hear what the client needs, but how is it that we can be the solution to what they need? And we can't be the solution if we don't hear them
Can you send me a copy of this?
all day. I got you.
Thank you.
Yes, ma'am.
I wanted a copy also, Tomekia.
Yes, ma'am. Miss Larissa, you got a good list, sweetie? Okay, we will definitely get you a list. If y'all think
Me
of
too. Felicia too.
Miss Felicia, yes, ma'am. If y'all can think of anyone that you would think could use the copy of the presentation or just to have an introductory call, please share their contact information with me. I saw some of you all just in Arkansas in July, and it was such a blessing. I appreciate
Mhm.
each and every one of you, and I just pray that the Lord just continues to send you clients so that we can all continue to thrive in this business. Miss Dominique, I think you're the youngest baby on here. So I just want to wish you well and to encourage you to keep going in real estate. Just keep writing your goals down and keep working hard. We're all gonna get there. Thank you, Mr. Mance. Well, thank you so much, ladies. Y'all have a very best day. Love
You
y'all.
Thank you.
Miss
Thank
Cindy,
you.
you're welcome. Bye-bye, honey.
Hi, guys.
Bye.
Thank you.
Bye.